chemical stocks there that Ashish likes. VK Sharma is also on the phone line with us. Good to have you, Mr. Sharma. The best day ever on the Bank Nifty, biggest gain ever in a decade on the street. What's going on? I mean, are technicals out of the window right now? How do you read this market action, and what's the scenario? Will we plateau out at these levels, or we are only building up for further gains from here?
I think for this we'll have the answer in the next few days. But I think history is currently being made. If the market closes here at these levels, it will be an all-time high in closing terms. So therefore, all of us are a part of the history. I think apart from the market perspective, it is for the nation that I'm very hopeful that we as a nation will really develop very fast, and this is the best thing that could have happened to India. So I'm not saying that the results don't matter. The results, of course, would matter. But I think as far as the capital markets are concerned, they had not factored in NDA victory at all. They had said that they'll just lead through, and based on this, they had investors, or rather traders, had written a lot of calls at 12,000 levels and 11,800 levels. Now those calls will now the markets will now further go higher. Obviously, going from the past, if you were to look at, in 2013, the markets rose on a closing basis 1.25% after the exit polls were announced. And for the next 2 days, they were just flat. And on the election date, because the numbers were higher than what the projections were given, the market jumped up almost 6.5% in intraday terms and 1.5% in closing terms. So one can expect 2-3% further rise from here on May 23rd. That is for the minimum. And if the BJP seats cross 300 level itself, not the NDA, then of course you are looking at a much higher figure.
All right, so 2 to 3% further upside is what we can expect come, the election outcome day on the 23rd. Mr. Sharma, the missing piece of the puzzle in the run-up to the outcome or the exit polls even has been FII action. We see net outflows for the month of May. If you expect that picture now turns, now that we have that certainty that perhaps foreign investors were hoping for, where do you expect the money will be moving?
See, on your channel, for the last 1 year, I've been telling that, and I've used these words, FIIs don't matter. In this market, the domestic institutions matter a lot, and for the FIIs have come in from February 19th onwards, and they have, out of the 55,000 odd crores that they brought in, they've only booked profits in 10,000 odd crores. So that's very healthy. I don't think it's wrong, but I think the money, they'll be back to their winning ways. They should be buying now. You should have a net buying figure today and for the next few days as well. So I think domestically, the buying power is intact with the small investors. A lot of money which was waiting to be put into the market, people who are waiting on the sidelines, because elections are a binary event. People were waiting. The markets could go this way or that way. Now that it has gone that way on the hard side, I think a lot of people will now buy in. But it will be very difficult for them to now convincingly buy, because the argument that the common investor would think that if I didn't buy at 11,200, why should I buy at 11,800? So these kind of things, these investors always have to face, and they'll keep on facing. And this reluctance of not buying can take the index further high. So it will not be we could see the 12,000 level this series itself.
Mr. Sharma, give us something that you like in the markets. What's the strategy that you'd like to adopt right now? How would you ride this upside?
See, I don't dabble, I don't, let's say, advise on mid-cap stocks, although my personal investment has been in there for quite some time in the mid-caps. But we have been very clearly saying that the visibility is in the banking stocks, because the 70% of the earning growth that will come in this year is going to be determined by the banks. So ICICI Bank, Axis Bank are the top picks. And within that, apart from banking, obviously the large cap Reliance, which still has the capability, despite it being at an all-time high, around 25% return CAGR basis it can give for the next 2 years, because not only the earnings will rise, but also the PE for the company is slated for a re-rating. So on these two count, I think I'll still with the large caps, and these 3 stocks I'll definitely buy.
What's your view on something like an SBI? I mean, could we see a scenario of something similar to what we saw in ICICI or Axis Bank 6 months ago? Axis was at what, 450 a few months ago, and from there it's now at 800. ICICI also at around 280 to 410, very strong one-way rally. Is something similar possible for something like an SBI?
Yes, there is a distinct possibility of that happening, because technically it is broken out. And obviously, the results were good. And going forward, I think the provisionings could still fall further. So even if some new things crop up, I think the bank should be able to take it in its stride. But before rising further, I think it will need to maybe test a while, maybe wait for a 2-3% dip and then buy. But right now, where would I see SBI from right now, from this till the year end? I think obviously it will be much higher than the current level.
All right, SBI looking fairly strong. Expect strength to continue. Would you be looking at any of the spaces that have been very heavily beaten down, metals, autos? Today, of course, we're seeing this kind of a rally, but can we expect that to sustain going forward?
See, obviously, when the index is bought, all the 50 stocks which are a part of the index will see some consequential buying. But within that, I'll not like to go with autos. But I'll still feel that if you have to pick up a commodity, it will not be steel, it will be cement, and Ultratech will like among this sector.
Mr. Sharma, thanks so much for joining in this afternoon
My pleasure.
and running us through trading of the market. So bias is still with the large cap names, but of course